Global stocks are bouncing back today as the flight from risky assets fades, and Bitcoin is finally finding some respite. Welcome back to Market Mind Solution. I'm here with your complete market wrap for December 2nd, 2025. Let's start with the big picture. After Monday's losses broke a rally that gave us the best week since May, markets are recovering nicely. S&P 500 futures are up 0.3%. Nasdaq 100 futures climbed 0.4%. The Dow futures added 0.1%. Over in Europe, the Stoxx 600 rose 0.4%, and Asian markets also closed in the green. This is exactly the relief investors were looking for after a shaky start to December. Now let's talk crypto. Bitcoin steadied after slumping more than 5% earlier. It's now trading at around $87,458, up 1.2%. Ethereum is also recovering, up 1.2% to $2,827. The crypto market has been on shaky ground after a weeks-long rout, but today's stabilization is helping lift overall risk sentiment. In the bond markets, things calmed down after Bank of Japan rate hike speculation rattled traders. A strong Japanese 10-year debt auction helped ease concerns. The 10-year Treasury yield sits at 4.09%, essentially unchanged. German bonds yield 2.76%, up just 1 basis point. Here's what everyone is watching: the Federal Reserve meeting next week. Markets are treating a rate cut as almost certain after softer labor and inflation data and a string of dovish comments from Fed officials. Karen George, a fund manager at Ecofy Investissements, says it's very much wait and see until the Fed meeting. And Michael Brown from Pepperstone put it simply: dips continue to present attractive buying opportunities. The bull case remains strong with solid earnings growth and a resilient economy. Here's a stunning number for you. U.S. equity short sellers lost $80 billion in mark-to-market losses in just the final week of November. That wiped out nearly all of the $95 billion in profits they had made earlier in the month. The message is clear: betting against this market continues to be painful. According to 22V Research, anyone wagering against U.S. stocks should consider two major factors: the economy's strength and continued artificial intelligence enthusiasm. Robust consumer spending and ongoing AI investment are supporting productivity and the profit growth needed to keep this rally going. Let's look at some big movers today. MongoDB surged 24% in pre-market after beating earnings expectations and raising its full-year target. Bayer jumped as much as 14%, its highest level since January 2024, after the U.S. Solicitor General urged the Supreme Court to consider the company's appeal in the Roundup lawsuits. And Warner Bros. Discovery is fielding a second round of bids, including a mostly cash offer from Netflix. Quick look at commodities. West Texas crude slipped 0.2% to $59.19 a barrel. Gold fell 0.7% to $4,204 an ounce. The dollar was little changed, with the euro steady at 1.16 and the pound at 1.32. That's your complete market wrap for December 2nd from Market Mind Solution. The bottom line: stocks are recovering, Bitcoin is stabilizing, and all eyes are on the Fed. If you found this helpful, subscribe to Market Mind Solution for daily market insights. Hit that notification bell, and I'll see you in the next video.